The Bank of Japan on Friday maintained its ultra-low interest rates as widely expected, swimming against a global trend of monetary tightening, as it attempts to navigate what it sees as a temporary cost of living crisis amid higher commodity prices and a weak yen, reflecting the impact of rising import costs of energy, raw materials, and other goods. The BOJ revised upward its core consumer inflation outlook for the current fiscal year to next March to 2.9% from its earlier projection of 2.3%. It would be the fastest pace of increase in 41 years on a fiscal year basis. At the end of a two-day policy meeting, the Policy Board decided to maintain short-term interest rates at -0.1% while guiding 10-year Japanese government bond yields to around 0%. It will continue to buy 10-year bonds at a fixed rate of 0.25% every business day to prevent the benchmark yield from rising above that threshold and to maximize the effect of monetary easing. The BOJ maintains that the current bout of inflation has been caused by higher commodity prices and import costs, and it believes monetary easing is necessary. But it faces the formidable challenge of transitioning such cost-push inflation into inflation driven by domestic demand and more robust wage growth in its effort to achieve its 2% inflation target in a sustainable and stable fashion. The government has already intervened in the currency market to preempt the yen's freefall against the US dollar and will continue to give short-term assistance to households by reducing utilities bills beyond the winter heating season. The BOJ said in its Fresh Outlook report that inflation is expected to pick up pace toward year-end but slow toward the middle of fiscal 2023, in line with Kuroda's recent statement that it will undershoot the 2% target in the next fiscal year. Based on the latest projections, Kuroda will see his term as BOJ chief end next April without achieving the 2% inflation target after more than a decade of monetary easing. Core CPI will likely gain 1.6% from a year earlier in both fiscal 2023 and 2024. Despite the drag of higher commodity prices, Japan's economy has picked up amid the waning impact of COVID-19 and is expected to continue recovering, the BOJ said, maintaining its assessment.